Smart 24, driving business.
Hello and welcome to the program. Thank you so much for tuning into Smart 24 TV, where we drive your business. My name is Anthony Sebale and I am your host. This is Financial Markets, and on this show we are very particular on what we air, and we do interest you in investing, especially in financial market products. And we want to make sure you're making an income on your savings by investing in the different asset classes that the financial markets have to offer. Now, remember to follow us on X if you are online, and follow us as well on our YouTube channel. That's at Smart 24 TV, or you can catch us live on GoTV and DSTV channels 372 and 394 respectively. We'll be definitely very humbled to have your feedback and interaction as well. Now, the fixed income market in Uganda has been growing. However, very few Ugandans have been able to leverage the opportunities it has to offer. Number one, because of the information gap, and number two, because probably people don't have probably what it takes. They think they don't have what it takes to invest in fixed income securities. Tonight, we are very privileged to have a team from Bank of Uganda join us on the show to break down some of these myths and be able to give us information on how we can leverage opportunities in the fixed income market. Now, joining me on set is none other than Miss Sarah Mukisa Mirembe. She's the team leader, domestic debt operations at Bank of Uganda. And then we have Mr. Moses Kwesiga, who is the acting team leader, division head for domestic market operations, and that is in the financial markets department. You're most welcome, ladies and gentlemen.
Thank you, Anthony.
I started with Miss Sarah. I hope Mr. Moses did not take it in a bad way.
No,
ladies first.
It's very natural.
Absolutely. Madam
Yes,
Sarah, tell us what you do at Bank of Uganda, especially in terms of you being in the financial markets department. We're on the financial markets show. We are definitely very interested to know what you are currently doing.
Thank you, Anton. Hello, Smart TV viewers. As introduced, my name is Sarah Mukisa Mirembe. I am the acting team leader, domestic debt, and my core activity in that section is to raise funds for budget support through issues of treasury bills and bonds. And this is why we are here to speak to the audience about the investment called treasury bills and bonds.
Amazing. Amazing. Mr. Kwesiga, what exactly do you do in this position as team lead, division head for domestic market operations? It's a very long title, I feel.
It needs to be shortened, actually.
Sure.
Yeah, you're right. Moses Kwesiga is my name, from the Financial Markets Department at the Central Bank of Uganda. Yeah. And I'm currently acting as the division head of domestic market operations. Domestic market operations has a number of aspects. It has the oversight over the foreign exchange market, oversight over the open market operations, and for this discussion, oversight over debt market operations. So the debt market operations relate to the domestic debt, where our fixed income for tonight is going to be focused, the treasury bills and treasury bonds. So that division oversees those operations.
Amazing. We definitely have the right people here. And now I would like to start off, first of all, if someone is viewing for the very first time, how would you define a fixed income security? Mr. Kwesiga.
Yeah, that's a good one. Yeah, we're starting it off from, I think, a technical point of view, fixed income security. So once you hear of fixed, just breaking it by each pieces, it means it's not changing. It means you know what will happen and when. And then what is fixed here is income. So you're talking about an investment where you know your income in advance, from the beginning to the end. Now, there are very other investments in this world. If you invest, for example, in real estate, the income you're going to get is not fixed. You don't know it. So it's not fixed.
No.
If you invest in shares, you also don't know what dividends are going to come next year or next 20 years. You don't know. So those are not fixed. So you're dealing with instruments. These are investment instruments where you know the income in advance. You know how much it will come and when it will come. That's generally fixed income. And most of us have played in this space in one or the other, but we didn't have the technical definitions or the jargons that we're handling in this session. So if you have ever, for example, given your money into a commercial bank, and you say, I want to fix deposits for 12 months with a given commercial bank, that commercial bank must have told you an interest you're going to earn out of that. And you know certain rates at the end of 12 months. So the income relating to your deposit in that commercial bank or financial institution is fixed. You know it. And you know when it's going to come. That's just one example. So we're going to be concentrating on treasury bills and treasury bonds, which are also investments where you know the income in advance. And you're going to be dealing with the government of Uganda fixed income products. What that means, you're going to be dealing with the Republic of Uganda. So the Republic of Uganda will be getting money from you. When they get it, they promise to pay you income, which is fixed. And you know, this is the income that will come, this is when it will come. So from the government side, government will be borrowing. From your side, you are lending, and within lending, you are investing because you're going to be earning this fixed income. So this is what we're dealing with in the subject of fixed income. As a matter of fact, they stretch beyond government. Also, corporations can have their products. So MTN can give you a promise, and they say, give us 20 billion, investors come, give us 20 billion, we will be paying you 18% per year over this period. That's also fixed income. As long as you know the income stream on your investment is certain, it's not going to change, then that's the fixed income investment. So for tonight, we will concentrate on government. This is the government of the Republic of Uganda. And this happens in other jurisdictions. Kenya does it, Tanzania does it, the USA is the biggest actually in this business, China does it, Japan does it, so we're just going to be specifying and remaining within Uganda, but the knowledge that we're going to be picking from here is transferable even to other jurisdictions.
Amazing. Thank you, Mr. Kwesiga. Ms. Sarah, we have our Ugandan, our regular Ugandan, when you ask them, when you talk to them about any investment, the first thing they'll ask is, "Mfunira muwa? Where do I benefit from?" And this is no exception when it comes to financial markets as well. Stock markets, we know we have a dividend, you know, we have capital gains. Then when you look at maybe the unit trusts, which we are also going to differ from how they differ. We're going to see how they differ from this. But we are always promised a certain interest at a certain interest rate. How does it work when it comes to the fixed income securities?
Thank you, Anthony. Whenever we offer an option, either T-bill or bond, new rates come out.
T-bill, now we are already confusing. Yes.
I will use treasury bills, meaning T-bills, and treasury bonds, meaning bonds. So whenever we offer those instruments to the public, new rates come out. And then we publish our results under the website, www.boe.or.ug. We are informing the public the results from the auctions. So any interested investor can take an opportunity to look at our website. We also publish those results in the New Vision every Thursday, informing the public. So those interest rates, we also have a secondary market report where we publish daily interest rates where they're running, right from a 3-month paper to a 20-year bond. So that information gives a guide to investors to know where the interest rates are running. So any investor who wants to buy either treasury bill or bond can have that informed information to make a decision, but the rates keep changing every day because of the running secondary market, where there's daily trading between commercial banks and other individuals. So the highest rate we are having is 16.5 so far. That is a 20-year bond. So those interest rates keep changing daily because of the running secondary market. That runs every day from 9:30 a.m. to 4 p.m.
9:30 to 4 p.m. Okay, that's the time for trading.
Yes.
Now, Mr. Moses, question here. We have the definition of fixed incomes. We have a picture of what's happening. But then let's talk about, she interests me with the fact that we start with an auction. What happens in an auction? What is an auction? And what are some of the things that we need to learn? Because I think the story of the trading and secondary market starts with an auction. What is an auction?
Yeah, that's a very good one, Anthony. I think Sarah has introduced a number of very good aspects already. She has talked about the treasury bills. She has talked about the treasury bonds. But just to clarify, so when you give your money to the Republic of Uganda, this is the government of Uganda, and I must specify, you're not giving that money to a regime, you are giving that money to a government that runs forever. It is not a political party that you are giving this money or these funds to. So when you give your money to the government, and we shall explain the processes, how you do that, it can be for a short term or for a long term. And short term we mean 1 year and below. So you could give your money to the public, say for 3 months, 6 months, 12 months. That's short term.
Yeah.
From the investment language, they say you have invested in a treasury bill. Treasury bill means you have given funds to the Republic of Uganda in the case at hand for a period of not more than 12 months.
Yeah.
That's a treasury bill. Investment, shortened for T-bill. If you give the Republic money for longer than a year, then we say in that language you have invested in a treasury bond. But at the end of the day, you are actually dealing with the same entity, the Republic of Uganda. So then you ask, how do I get to give money to the Republic? Do I go to the Minister of Finance? Do I go to the Honorable Minister of Finance's house and I deposit the money there? How do I go about this? So that's the process. There is a framework which we utilize. It requires that an individual or a corporate entity opens an account at the Bank of Uganda. This account is an investment account. Normally we call it a Central Securities Depository Account, or CSD, for that. So any potential investor has to open that account, CSD account at the Bank of Uganda. Now, whether you're in Karamoja or you're down south in Kabale, this is very easy to do. All you do is approach a commercial bank, any of the 25 commercial banks, and tell them I want to open an account at Bank of Uganda because I want to begin investing in treasury bills and treasury bonds. So we have given rights to all the commercial banks throughout the country to receive those applications to open an account and also open that CSD account in the Bank of Uganda systems. So it is online and strictly online, and it's a very simple process. Now, opening up that CSD account requires no money, so you don't need to prepare and have any shilling or coin, as long as you can reach a commercial bank. So then you're able to open an account, have a national ID, and take some 2 pictures, 2 photos of yourself, and that's it.
Yep.
You can now open that CSD account. Now that you have opened up the CSD account, the next steps is go ahead and invest. Then you say, what do you mean? Still using that very commercial bank, you could change, no problem. But using that very commercial bank, you would give them an instruction and tell them, I want to invest for 3 months, 6 months, or 2 years, 5 years, 20 years, with the things that they are talking about, treasury bills and treasury bonds, which generally are called government securities. In the case of that, you actually chose to use fixed income. The commercial bank will take that instruction as long as it's a minimum of 100,000 Ugandan shillings. Okay. Because that's the minimum investable amount. You need a minimum of 100,000 Ugandan shillings. Remember we said opening an account requires no money, but it is the investing part of it. When you give an instruction to a commercial bank, you have to have a minimum of 100,000 Ugandan shillings. Yeah. And any increment in the same multiples. So 200,000, 300, 400, 450 is not allowed. Right?
It's in the units of...
it must be
in the unit of 100.
A multiple of 100,000 Ugandan shillings. Okay. So the commercial bank will take your instruction. Now the commercial bank has two ways in which to get the investment. One, what we call the auction. In the market language, we call it a primary market auction. So what does that mean? We have a calendar. The government has a calendar. It's published in the papers. It's on the Bank of Uganda website. It's also on the Ministry of Finance website. When you know when the government will be asking to receive funds from the public. So that is calendared. For the short-term investments, which are treasury bills, you know every 14 days there is going to be an auction. Okay. Only the commercial bank can access this auction.
No individual?
Not individuals. Okay. So individual will not access because they have given their orders to the commercial bank. So when you give your order to the commercial bank, then the commercial bank can take that order to the auction. For bonds, which are long-term investments, 2 years and above, currently they got 20 years. The auction is every 28 days. Okay. So you know, every 28 days there is a bond auction. In other words, if you are saying you must invest via the primary auction, then you can pull out that calendar, keep a watch on those dates. Only the commercial banks, as I said, can come to the Bank of Uganda in the auctions. So you don't need to send a representative. Or you will give your order to the commercial bank, then the commercial bank will be able. My colleagues are already pointed to that. They will be published in the papers, they will be in the social media, they will be on the Bank of Uganda website. You will know what interest rate you are going to earn on your investment. Remember, we call this fixed income. That interest rate you see is going to remain that rate throughout the life of your investment. If that is my interest. So it's going to be like that throughout the life. That's the primary auction. Suppose you didn't know about the calendar, and you just find you have money, you want to invest, you want to give your order to the commercial bank, but you don't know about the calendar. So what that means, you can reach out to someone who already has the investment and they pass on their investment to you. So Sarah can sell her investment to me. If she has invested in a 10-year bond, maybe 5 million, I can buy it from her and I now get entitled to the interest income. But you may not know who is actually having the investment. So what happens, you go to your commercial bank and tell them, today and today, I don't get calendar, I want to invest today. Now that's what we call the secondary market. So the commercial bank will take your order and immediately apply it and you have your investment. Why? Because every commercial bank that is in this business will have the investment that they can pass on to those investors that come outside the calendar. Now that's what we call the secondary market, where you just pop up any business day and say, I want to buy. But also, when you're buying, someone else is selling. So someone else is exiting, they're getting cash as they give you the investment. So that's the secondary market. So there are two channels, primary market through the auctions and the secondary market where you just buy from the commercial banks.
I want to bring in Ms. Sarah here. When he has been breaking down the auctioning, the primary and secondary market, he kept mentioning commercial banks, but we also hear of a term called dealers in this market. And when some of our Ugandan people hear dealers, they of course, their minds go skeptical on who is the dealer here. Commercial banks, what is the role? And is it all commercial banks that they can actually deal with these fixed incomes, or there's just a specific few?
Thank you for that question. We rolled out what we call primary dealer market makers, where we selected 8 commercial banks that we call primary dealers. So now currently we have 8, and we evaluate them every after 3 years, and then we pick on other people who are not performing to our expectations. So apparently we have 8 primary dealers. One is Absa Bank, 2 is Centenary Bank, Citibank, Equity, Housing Finance, DFCU, Standard Chartered Bank, and Stanbic. I think that's the number.
Okay.
So those ones are mandated.
Amongst, and I think we have about 25 now banks. So out of those, we only have 8.
Of those 8, they are mandated to buy in the primary auction, what we call competitive bidders.
Okay.
We have a category called non-competitive bidders. Those are the ones who come in sizes from 100,000 to 200 million.
100 million.
200
million. Okay.
Yes. So those kind of bidders, their bids go through. You don't have to quote a rate when you're lending money to the government. So there are these primary dealers.
So here's the thing. The competitive bidders have a right to say, this is the interest rate I want.
Yes.
The non-competitive have no right.
No, they don't have.
Wow. Okay.
So we have the competitive bidders that come in 200 million and above. There is no limit. So those are our primary dealer market makers. They are mandated to participate in that kind of category to buy wholesale and then retail in the secondary market.
Let me get the picture here. Do all the 8 fall under only competitive bidders? All the 8 dealers?
Yes and no. They can buy.
They can buy as non-competitive or competitive, depending on their bids.
Yes, depending on their bids. But they are mandated to buy to underwrite our auctions through the competitive bidders. That is why you never see our auctions underperforming. They are always oversubscribed because of these 8 primary dealers we license who are buying from the primary market in the competitive category and then retail in the secondary market. So ever since we rolled out the primary dealer market makers, our secondary market has evolved because they buy from wholesale and then retail in the secondary market at just a minimum margin because they are traders, they have to make a margin out of it.
Now, a quick question here. Banks always have money. We have these deposits we make, they have fixed deposits. Isn't this the money they're actually investing? Because honestly, I don't know. I feel like because they have this right to get into the market, especially in the primary market as competitive and non-competitive bidders, I think they have a right to use the money they have, even when they don't have investors. Is that something you have under your jurisdiction as Bank of Uganda?
Let me first clarify something. So we have about 25 licensed commercial banks in the Republic. And out of those, my colleague has stated it accurately, that we have 8 primary dealers. In the real language, we call them primary dealer market makers. The reason we call them market makers is anytime you want to buy or sell, they are obligated to sell to you or buy from you. So if you want to exit, and you reach any of these 8, they give you cash immediately, you exit.
Really?
Like if you want to enter any business day, you reach any of these 8, they give you entry into the system. You buy, you invest immediately.
They make the market.
That's why it's called primary market makers, because they make the market. Now, all the others are also allowed to do what they are doing. As I said, open accounts for the general public, receive bids, receive orders, that's fine. But you won't reach them and mandate them to buy from you or mandate them to sell to you. You can't do that because they don't have that obligation. Now,
only the 8 have that.
Obligation.
Okay. So the money has to be there. When I need it, it has to be provided.
It has to be.
So long as I invested.
As long as
you
invested in the investment. They will give you cash, you go. They will find where to put the investment.
It's up to them.
Yeah, so that's an obligation that comes with some benefits. And the benefits are that they are the ones who will come to the primary auction with what she has called, my colleague Sarah has called, competitive bids. So they will come with the price, and they say 20-year bond wants 16%. If not that, we will not give you money. Right? So when they get that at 16%, then they will go and sell to whoever else could not come competitively or with the price in the auctions. So that's their benefit. Because they have an obligation, it has the correspondence benefit that they can access auctions. They have the exclusive rights to come and access auctions at their price that they have chosen.
Amazing.
But also within the obligations, and my colleague has highlighted that, the obligations of those 8 are such that in each auction they must participate.
Yeah.
Now, whether you have funds or not, they have to participate. Now, other banks are not obligated to participate in the auction. Remember, the auction is raising money for government to go and build roads, to go and pay for medical bills, to go and pay for salaries of public servants and all that. So when government wants money, these 8 have said, we'll make it available. So that's an obligation.
Yeah.
And so when you're talking about these 8 being able to get the nipples and plug them in here, it is the whole economy is involved here.
Yeah.
It's not just the commercial bank's interest.
Yeah.
It is the interest of the whole economy because government wants the funds.
Amazing. We're going to take a quick break, Mr. Okwesiga. The conversation can't be more interesting. And when we return, we want to look at what are some of the benefits of investing in these instruments. First of all, to individuals and the investors, but also to the economy. I believe we are lending to government as an entity to be able to provide services to us and also be able to reach out to the different other departments, especially financing the budget that they have. But also, we want to look at the cost of investing in these instruments. There is a tax, and we want to know how much is that tax and when is it levied. My name is Antonio, and we're returning after this quick breather. Don't touch your dial.
Smart 24, driving business.
We are at Shiloh Standard Nursery and Primary School to reward our lucky winner again for our pay school fees with Momo. We are paying school fees for a student who is lucky because the parent used our codes to pay their school fees. You can as well be our winner for the next school fees prize by dialing *165 *80# and you opt into the competition.
Umiatia goin shag no goy simple luagene kanti bisholo kwana tena anene wa po berane da kwani ba mi gum afu akwa yo dusu meti kere mba man me ma fen MTM kiken ba mi gum hi man.
Together we're unstoppable.
If you play a game of power,
Chelsea is rich.
I didn't lie to you. I only withheld the information.
Any minute I get, I'm going to tell Chelsea.
be prepared to lose it all.
I'd rather be buried alive.
Damalai makes her boldest power play.
Very dramatic.
In season 2, Monday to Wednesday at 8:30 p.m. Only on Pal Magic Prime. DSTV channel 148, Go TV channel 303.
When it comes to unboxing the biggest and best shows on the planet, we've got plenty.
Go ahead.
Yep, we've got loads of this, buckets of that, and bags of those. There's smart stuff and fun stuff. The best under the sun stuff. Far places and spaces. Car races and chases.
Paw Patrol is on a roll.
Yes, we've got heaps of absolutely everything ready and waiting for you to unbox. Only on DSTV.
Are you a woman entrepreneur or a woman owning a business and looking for affordable financing to scale up your business? Look no further than the Grow Loan. Grow Loan targets female entrepreneurs nationwide. Key features include a minimum loan amount of 4 million and a maximum loan amount of 200 million shillings, a maximum interest rate not exceeding 10.5% per annum, a loan repayment period not exceeding 24 months. All Grow Loan borrowers must comply with the Grow Project environmental and social standards. Special incentives are available for borrowers that are refugees or from the refugee host communities, people living with disabilities, and women entrepreneurs from the underserved or minority groups. To apply, contact any of the 6 participating financial institutions. Contact us for more information or visit our website at www.grow.go.ug. The Grow Loan is an intervention under the Grow Project, a Government of Uganda project financed by the World Bank and implemented by the Ministry of Gender, Labour and Social Development and the Private Sector Foundation Uganda. Grow, generating growth opportunities and productivity for women enterprises.
Cooking oil like no other. a meal so sweet and scrumptious. The taste of Uganda. Yeah, the taste of Uganda. The taste of Uganda. Yeah,
Smart 24, driving business.
Welcome back, ladies and gentlemen, and thank you so much for tuning into Smart 24 TV, where we drive your business. My name is Anthony, and tonight we are discussing fixed income securities. Did you know that you can actually exit at any point in time? I'm learning that today. I mean, we always think that these fixed incomes are for only people investing billions of money and people who are investing only for the long term. But hey, Bank of Uganda is here to tell you, you can actually invest short term, you can invest long term, you can withdraw, you can deposit at any point in time. You can have the liquidity you want, even when you're investing in fixed income securities. Now, Madam Sarah, we've discussed mainly, especially in our first segment, how the fixed incomes come from you, the Bank of Uganda, into the primary market, then into the secondary market. But when you look at the few investors that are within this market, some of them, I think, keep the information to themselves or something, but they don't tell us exactly how you leverage the market. How do you benefit from the market as an individual investor? Later on, how is government able to keep borrowing every 28 days, every 2 weeks? You know, how is it able to pay back its other investors? You know, some people are worried because when we look at the budget, you know, in Parliament, people are fighting over the funds. We don't have money, you know. But how are they able to keep this thing rolling? I'll start with you, Mr. Kwesiga, on that one. How the mutual benefits of this to individual investors, but also to government, despite it having to borrow every 28 days and 14 days.
And that's a very good one, Tony, thank you. So I think we begin with the big picture, that government has a budget. As you know, their source of income is general revenue. URA has to collect taxes, but the taxes will never meet, at least for now, until maybe when we begin to see oil come out of the ground in Albertine region. That income side may not be able to meet the expenditure side, what the government needs to spend. So what does government do? They say, all right, let's handle these different projects using domestic borrowing. As you know, there is also external borrowing, where you borrow World Bank, IMF, borrow from China and the rest of the bilateral counterparties. But you say, let me use the domestic market. Now that's very, very important. Even if you have, by the way, options to borrow from outside the country, you need to be self-sustaining as a country. And for you to be self-sustaining, it means you can generate your resources domestically as opposed to relying on external sources. And you would know, I'm sure you've heard about National Social Security Fund, which collects money from employees and employers every month. They need to deploy these funds. They wouldn't deploy them in the USA, they wouldn't deploy them in China. They need to deploy them within the market here. So what are the options? Government has to create avenues. So within the domestic borrowing, where you provide treasury bills and bonds, you have given, for example, National Social Security Fund, an avenue to deploy the savers funds and grow the economy. So beginning with that high-level perspective, the biggest benefit is for everybody actually that resides in this economy. Because our economy is growing by this mechanism we're talking about, issuance of treasury bills and treasury bonds. because you are creating a mechanism in which savings can be deployed into investments.
Yeah.
If you just save and put money under your bed, great work. But that is not going to take us far. Why? That money is going to be reducing in value because the prices of goods and services are going up. So when you have an avenue like treasury bills and treasury bonds, which have been created by government, then you can deploy those savings into avenues like this and make some income.
Yeah.
So we look at it from that picture first, that it is an investment opportunity given to the Republic and the members of the Republic, the citizens of the country, citizens being both corporate and individual, but also you are cushioning yourself just in case the external parties, you're not in good terms with the external parties. I mean, as a country, how do you move forward?
Yep.
So when you have already this mechanism of raising funds domestically, it means in case of things going bad from the outside the world, you can still survive. And we saw this, by the way, 2019, 2020, during the COVID times.
Yeah.
When it was difficult to get money outside Uganda.
Sure.
Because the lenders are not going to give you. They know the risk is very high. You may not pay back. Things are not working out. So what do?
You run to your own
treasury bills and bonds. And we were able to run through the crisis safely. So from that bigger picture, we need to know that both investors in the Republic, this country, Uganda, and the issuers are working together to create an economic environment where the country can sustain itself. That's the big overriding picture. Now coming down to the individuals or any other investor that is doing this business. One, we talked about very good interest rates. Sarah spoke of 10.5%, for example, per year. That's the interest rate when you invest for 3 months. A 3 months investment at 10.5% currently. Inflation is below 5%. That means your money is cushioned against price movements. But also you have an excess return. You have what you call real return, the real benefit of investing beyond inflation. Because 10.5 I think is reasonable for 3 months. We're talking about 20 years, 16.5% interest per year. That is a great investment. So in terms of benefits, you know you have a very competitive interest coming from you.
We also know that this interest is received in 6 months for the annual interest.
Yes.
Is that
now let's go to the bonds. For treasury bills, they pay you interest at maturity.
At maturity. So you have to wait for the 3 months. Yeah. So let's use 100 million as a figure maybe to demonstrate.
You invest for 20 years. So 16.5%, you are earning 16,500,000 per year. I believe that is a very good deal. Why it is a good deal is because of the advantages we're going to add more as we talk. It's a good deal because you are going to sleep and just relax.
Yes.
Just wait for the time when this interest will be paid, and that's it. No hassle, no fighting
no
with
bustle.
anybody, just no money.
No land grabbing. No. You don't have to fight with. Okay.
So you are dealing from the economics perspective with the safest investment that you can make, because you don't have another safer investment like this. It's very safe, but giving you that very good interest income coming to you. That's another advantage. But within the first one, you have a very high interest rate, in my view, competitive enough to keep you going, but also it is hassle-free.
Yeah.
Money just comes like that when you're sitting or sleeping, if you choose. The other aspect to that is we say you can exit anytime. So what that means, as opposed to someone trying to sell a plot of land somewhere, where when a problem has hit you, they may get that land from you at a forced sale value of sorts, a very unfavorable price because you are in a problem. Here you are going to exit at a very peaceful price. That's what we call liquidity. That when you are invested in bills and bonds, which are the fixed income we are discussing, is that you have liquidity. Anytime you need cash, you have cash. So in addition to what you get in terms of the interest payments, but also you can exit prematurely. Which means you can do partially. If you invested 100 million, you can say I'm just exiting 1 million because my problem right now is 1 million.
1 million, yeah.
Or 50 million. The other balance can remain running. So one of the benefits is liquidity.
Yeah.
And for example, if someone has retired, you know the biggest challenge for someone who has retired is liquidity.
Yeah.
You may have assets, great, but if the cannot solve your immediate financial problems, and when you need them solved, then your assets may not be very good.
True.
So there is that aspect of liquidity that the investor in treasury bills and treasury bonds need to be aware of as a very good advantage.
Yeah.
The other one will come as we discuss tax.
Yeah.
We have some advantages there, although most of the time we look at tax as a bad thing, but we'll get to that point.
and I think tax is a very uncomfortable thing. It's a necessary evil, so to say. But that's, I think, what most people perceive it as. Now, Madam Sarah, how do you, for example, you as a person, I know because you work with the institution, you must be an investor as well. Now, you as an individual investor, what advice would you give to an investor looking at all these options they have? They have the unit trust fund, they have the stock, they have the treasury bonds and treasury bills. Which investor should go for what?
Thank you. Just like my colleague Moses has stated, look at the interest rates attached on the investment you want to invest.
Yeah.
Look at the risks attached. If I put my money here, am I assured of the return? Am I assured of recovering my principal? Because government bonds and bills is the only investment you do where the money you've put return back fully with an interest.
Yeah.
So look at those whatever, those factors. If I put my money, what are the operational costs I'm going to incur, right? Am I going to put other operational costs? So for example, if you're going to pay a caretaker, you're going to renovate a house, all those come to deduct from your capital, your principal amount. But when you invest in a treasury bill or bond, your money is intact. Your principal amount is not going to touch. So look at other operation costs you're going to incur, the time you're going to use to invest that business, to run it, what risks are involved, amounts I can get my return. And I can have a portfolio of investments, as in I buy many bonds, so I project that every month, because bonds give you different interest payments periodically. So you can buy as many bonds and know that I have a bond that is giving me an interest in January, another is giving me maybe in February, another in March. So you have a portfolio of investment that are giving you cash flows at different levels of the investment. So if the advice I give to the viewers, look at the interest, right? What are the returns even after tax? What am I going to benefit from this whatever investment? So also use investment fixed deposit. Should I put in treasury bills? Get those investment advisors to advise you, because they know where the interest rates are, so that you make a uniform decision on where to put your money, so that you don't make a loss but make a margin out of it.
Is a unit trust really worth investing in when we get the picture here? Because, okay, to be honest, they are investing in the instruments we are talking about here. And when you look at the popularity they have currently, numbers are going up, over 79,000 investors, 3 trillion worth of investments. And most of this money is going into fixed incomes, at least 95%. Why should I really go in the unit trust and not go direct into the market? Where is the logic?
Yeah, that's a good one. From a product perspective, a financial market is deemed to be growing if you have a diverse of products that investors can put their funds to. Because different investors have different considerations when they're going to place their funds. So you need to create a system where people can do what they want, choose the instrument they want, or a mix of instruments that they want. So we look at all products as being necessary. So when you talk about, for example, unit trusts, the unit trusts come in different forms and shapes. There are those which invest in the money market. They stay at the short end, so they don't go more than 12 months. So they will put some funds in the fixed deposits, 3 months, 6 months, 12 months. They put some funds in the treasury bills and treasury bonds. So they stay at the
commercial papers,
commercial paper, right? So they will stay there. So there will be investors who actually have funds they need to deploy only at the short end. So that investor may say, I don't want to only put in a T-bill. Has now put this together in a package. So someone will go and utilize that unit trust, which is invested in the money market, as opposed to coming to a treasury bill. Right? there are other unit trusts which will go long term.
Yeah.
And they will do bonds.
Yeah.
And within the bonds, they will mix them. So if your money is little and you are an individual, you are not fit from the mixture.
In the unit trust. Yeah.
Trust.
Because of the amount you have.
Yes. Because of your investment.
And that's exactly what my problem was. We had the chat with Madam Sarah. Leverage than investing in the bonds. I mean, I have 1 million savings, let's say, in every 3 months. And in every 3 months, a unit trust offers me, if you break down the 12% annual interest, some good return. Okay. And then going direct into the bond where there's even a tax, by the way, which we're about to talk about, unit trusts are not taxed. I would feel like I'm safer with that little small money that I have in a unit trust.
So I was still coming. I was saying that those that will do bonds.
Yeah.
There are those that will be in the equity side. So they will invest in shares. They get some shares of Stanbic, they get some shares of Nile breweries or East African breweries, they get Safaricom, they combine, and then they give to the unit holders.
Yeah.
Alone, you may not be able to invest in all those combinations. The unit trust may be able to do that for you. But if you are a savvy investor, an investor who is very, very, very top notch, you may say unit trust is not a good idea because you can combine your assets very well.
By yourself, you know what to do. Yeah.
Or you have another advisor somewhere.
Who is good?
When you look at the cost, the fees, for example, that will be subtracted from the unit trust income, you're like, I think I have another finance advisor. Looking at other things he handles for me, I think he can handle this. I don't need a unit trust. So there are several considerations to look at before you decide. But if you asked me, as me, which one would I go for?
Yeah.
I would be also asking the same question. What do I intend to achieve? Because I must have an objective before I choose which product. So the short of it is we need all the products.
Yeah, sure.
The critical part is know the details, the technicalities behind each product. As Sarah said, look at the return. Look at the fees that are going to be subtracted from the return. Look at the liquidity levels, how quick it is to get in and get out. We have seen that unit trusts are liquid. We have also seen that treasuries are liquid. Any moment you want to exit, you exit. You want to enter, you enter. So you look at the different characteristics, the features of those products, and then you make your informed decision on whether you want to have bills independently, you open your own CSD account at the Bank of Uganda, or you prefer that the unit trust does it. Some people, they say, I'm not residing in Uganda, I live in the diaspora. I think the unit trust handle it for me. Another person says, even when I'm in the diaspora, let me have my CSD account. I'll be sending instructions virtually, if there is something like that, through my banks to deploy my orders at the central bank. So I don't need unit trust, I don't need fund managers. So many considerations to look at as we talk about the benefits.
Amazing. Ms. Sarah, what are some of the tax implications as we come down to, of course, towards the end of this? We need to know because, like you said, tax is something people dread. You know, it is something whenever people hear, that is taxed. I think that's not a good idea to go into that. But what are the tax implications of these fixed incomes?
Okay, thank you. Any investment in Uganda attracts income tax. Allow me to give it context. In the Bible, in Malachi 3:10, says bring you 10% from your income. So are these government securities. So the bills, that is...
So you guys collect tithe?
Okay. So URA collects tithe through taxing the income from the interest you earn from the government.
So it's the interest that is taxed?
Not the principal amount. And remember I told you, when you invest, your principal amount returns back fully untouched with an interest. So it's upon that interest that URA debits their tax. So a treasury bill that is 3 months to 1 year attracts withholding tax of 20% from your interest.
20%?
Yes. A bond from 2 years, 3 and 5 also attracts withholding tax of 20% from your interest. Then a bond from 10 years, 15 and 20 attracts withholding tax of 10% from your interest. So it is not us, it's URA that takes off portion from the interest and from...
Give us a picture. For example, if you have a coupon, let's say the interest of 16 million, we are using 100 million, for example. The one we talked about, 16.5 million.
The 100 million, which you did in a 20-year bond.
So, and she's saying that's going to call for 10%. That's 10% of 16 million.
10% of 16.5 million.
Yeah, that's 1.65
million. That goes to URI.
I think it's
a small number.
It's not.
If you do the math,
yeah, okay.
It's a small number. You're getting 16.5 million and removing only 1.6 as your tax.
Sure.
Yeah. It should be good for all of us in the economy.
Why is it 10% for the longer term, yet they earn more? I feel like it's, I don't know. I feel like it's not fair to these people earning the 10% to be taxed 20%, and then the other people. I don't know. How is that, Mr. Yes.
Because getting money from investors to lock in for a long period, you have to give them some incentive, some spices. So getting somebody's money to invest for 10 years, 15 and 20, you have to convince them why they should hold their money for that long period. So that is where the tax element was reduced. Initially it used to be 20%, but then we subsidized it to 10% from your interest.
Oh, amazing. I get the picture there. Mr. Kwesiga, when you look at why people usually go for the other products, like the unit trust over the direct investment in bonds, it's the user friendliness, the technology. I can right now invest in my unit trust right now with my phone, with my mobile money, where you told me for the bond, I have to go to the bank, and then there are 8 banks in particular, which I have to go to. You know, that those stringent, steps that you have to take. People don't have time. In this day and era, people are busy looking for the money, which they want to invest, of course. But why is it so difficult? Why do you make it so difficult for the bond? Is it intentional, that you want it for the specific patient few who can endure the process? Or you can make it more user-friendly?
Yeah, that's a very good one. I think it is speaking to where we come from. Our market is relatively young. It's been growing. Slowly. There was a time when we only had treasury bills. Then we went on to add bonds, and even bonds would go up to 5 years, 10 years. Over the years, we said, okay, can we stretch a bit, 15 years? Can we go now 20 years?
No. I think Kenya has 30 years as well.
Yeah, that's right. So it is a market development issue. For example, we have a project that is running right now. Could have heard about Project of Savinga, where we expect that there won't be movement really by individuals from any region when they want to invest. They should be able to get to your phone, dial something, whether it is the small phone, the big phone, smartphone capability, it will still be working so that you can deploy your funds any day, any time. That's what we are headed to. It's just a matter of time. Now, I know there are already some platforms that provide that option to invest in bills and bonds via the phone. I know some exchanges, I think Rotex does it. But it may be more expensive outside. So you need to be watchful while you use the efficiency and the quickness of deploying funds. So we are looking at something that is going to be affordable by the common man, where you invest as this was 10,000 Ugandan shillings when you have it, or you disinvest, get out with as little as 10,000 Ugandan shillings. That is work coming up. It's work right now in progress, but we intend to deploy that product very soon. That will ease the challenges, but as you know, when you have that, it is really aiming at financial. You want to penetrate everybody's household. So if you have a lot of money, you may not use that channel of mobile phone. You will still remain with the mainstream method of investing via the commercial banks. So we just want to create alternative ways of accessing the financial market. And there is a lot of work.
How about merging the two depository accounts? We have the CSD and the SCD for the stocks. We've had an argument before here on the show that these two should be the same. Because literally, if you want to access your stock market portfolio, your bond portfolio, you would want to go to the same place. Is there also effort in that direction to merge the depository accounts?
Yeah, that's a very good one. I'm sure you could have heard already about it. From even far beyond Uganda, from the East African community perspective, the dream is to have a depository for all the East African Economic Community members, ESC members. That's the dream. one depository for Uganda, Kenya, Tanzania, Rwanda, Burundi, DRC, Ethiopia, and everybody who will be in the community. That's a dream.
Yes.
And there is work going on from that perspective. So right now we acknowledge the challenges of segmentation, where you have to open an account at the Securities, and then you open another account at the Bank of Uganda.
Yes.
And you're talking about similar financial products. Why don't you have one depository to do that? That's where we're headed to.
Okay.
So right now, for the treasuries, actually there is a project which should go live before the end of this calendar year, where the depository at the Uganda Securities Exchange will speak to the depository at the Bank of Uganda. That's already ongoing.
Okay.
And that's in the direction of the future, where East African depositories are
can have one. Yes. Amazing. Yes. Our time is fast spent. The conversation was very interesting, and we are very, very glad. We hope you can come back, because information as we wind down.
Thank you very much, Anthony. One of first, thank you for the opportunity, availing us your time to speak to us. I would also love to thank Capital Markets Authority who sponsored this program. They reached out to us. Thank you so much. We can't take your offer for granted. We also want to thank our viewers, Smart TV viewers, and we appeal to you to come to Bank of Uganda, come and buy the securities. They're risk-free. In the event that you're not getting assistance, there's somebody who will attend to you. I, Moses, or any other person will come and attend to you. We educate people. We carry out government sensitizations.
The problem is a lot of security along that gate. I don't.
Once you're there for a right purpose, the security guards are very good. Tell them what has brought you, and then they will guide you to the counter 14. So we have our website. Utilize it under financial markets. Every knowledge about reach out to us. Financial literacy is key before making an informed decision on where to invest your money.
Mr. Kwesiga.
Very good. Yeah, just picking it up from Sarah's endpoint. You can be reached by media accounts. You just go there. We will not ignore you from there. There is no security there. You just go, type your question, query, comment, complaint. It will be attended to. Encourage everybody to reach out, explore more. Where you answer, reach out again to Bank of Uganda. We are available and we are happy to address any concerns. We always actually have to do this, and one of the things we do is go round the country. Since you see us in Mbale, see us in Imbara, see us in Soroti, we are actually doing that to tell you we are a bank that belongs to the Republic of Uganda. It is your bank. So also on that same note, when you hear our drums, when we are visiting different parts of the country, because we do, to explain these very products, just reach out, because they're always free, and attend to us so that you can get more information. And as a country, we already pointed out that the minimum amount you need to save is just 100,000. That's the minimum amount you can invest in treasury bills and bonds. And we want to improve the saving culture of this country. The more we save, the stronger we become as a country. Financially independent, we'll be more financially independent. That means if there was any crisis and we can't get funds or support from anywhere outside Uganda, we'll be able to sustain ourselves.
Wow. Thank you so much.